Apple stock has just seen its biggest jump in nearly 3 decades, but is this the start of a bullish breakout or is this just a sugar rush? Today we're going to be diving into Apple's price action and the recent tariff drama, and what exactly the analysts really think about its future. So let's break this stock down and see if it really deserves a spot in your portfolio. So currently on a year-to-date chart, Apple is down 23%, and on a one-year chart, it is up 14%. So there is potential promise with this stock, but we have seen this stock fall down massively since the start of this year. On a one-month chart, we've seen the recent decline in Apple stock really take place, as of course we have seen this recent US tariff drama. The earnings per share for Apple are currently $6.30 at 192, and the current PE ratio is only set at 30. And within the next year, Apple is expected to earn a 10.8% profit over the previous year. But of course, is this necessarily going to be the case now? We have seen this recent tariff drama, and especially with Apple manufacturing the majority, if not all of its products in China, they are definitely going to get hit quite significantly. Of course, though, Apple is now up massively as of recording this, as the tariffs have been paused for 90 days, apart from the ones in which were implemented on China, which are now all the way up to 125%. And Apple has now lost their title of world's most valuable company to Microsoft, which in turn led to the shares falling 5%, which now means the stock is down nearly 25% since Trump's Liberation Day. Of course, it's estimated that Apple manufactures 90% of its products in China, which is obviously a bad thing in this current climate. However, Apple is willing to spend more than $500 billion in the United States over the next 4 years on assembly and manufactures. This was actually released on the 24th of February, so this was even before the tariffs were announced, which just means that the infrastructure has been planned for quite a while, which is of course a very good thing right now. And here we can see that the White House insists iPhones will be US made, but Apple calls it a non-starter. Essentially, with experts doubting the $500 billion investment from a shift from Asian manufacture to American, as of course labor costs are going to be way higher in a American labor market compared to an Asian market, therefore meaning that iPhones will intrinsically cost more anyway. So this could definitely be a really bad start for Apple of 2025, and it could just project further on into the next coming years, as they are really now going to suffer with this administration. Even if they do manage to move into an American market, they are going to obviously suffer due to higher labor prices, as I mentioned earlier on. Despite this, iPhones are still only £1,000 in the UK. I mean, I think it's $1,000 in America as well. So it is actually still relatively, I would say, cheap. I wouldn't actually say that's necessarily cheap, but it has been roughly the same for the last 5 to 6 years. They have actually managed to deal with inflation relatively well, but I do think that's down to their manufacturing capabilities being in China again. I think that is one of their biggest benefits really to their current systems, but obviously that is meant to change now, and even if it doesn't change, they're going to be basically charged double to import their current stock. So while we have seen this massive bounce back in the last couple of days, I don't think that it's justified, and I think we're going to see this just continue to fall down now, as Apple are in a very sticky situation essentially, and I don't see them being able to recover from this with ease. They are of course in a short position on the MACD indicator and on the exponential moving averages. I can expect them to be below all of them, exactly as we can see here. This is of course a day chart. And with them breaking through the support previously, they have obviously now climbed back up, but I reckon they are going to start to aim back down for this support. Of course, I don't know when this video will be out. It'll probably be out in a couple of days after I've recorded this, as I'm away, but I will expect it to be around about here early next week. And on the trailing 12 months, we can see that their retention rate is around about 24%, which is just absolutely incredible. So there is obviously a bit of a margin here for Apple to manipulate where they do move their labor force. If it is into the United States, then obviously it's going to be a lot more. But if they start to move into, I know Vietnam is now getting a lot of tariff speculation after the next 90-day call-off. But if they can find somewhere else, maybe even in the EU, even though obviously, again, that's a risk, it'll be interesting to see if they do manage to manipulate this. Obviously, their retention rate is going to suffer as a result of this. And Apple's liquidity ratio is actually not as high as we would expect it to be for the whole of 2024. It's around the 0.6. So for every dollar of debt in which Apple owes, they only have 60 cents to pay this back in, essentially. But when we do look at Apple's free cash flow, we can see this is why. I mean, their free cash flow is absolutely outstanding. Something which Apple can be very proud of, and that is exactly why investors are so happy to invest in Apple, because there's absolutely zero chance this company can just suddenly go bust like that. Essentially, it is very stable. Just on a side note, I do think this recent stock market hype is very almost unjustified. It's just because Trump said that tariffs are now paused for 90 days. But if we do look on Schiller's PE ratio, it's quite clear to me that this should still be really high. If I can find it, which I'm struggling to now. I forgot to put PE, that's why. If we look here on a Schiller's PE ratio on a 5-year chart, we're still in very similar territories to where we were in 2022 when the stock market started to crash, of course. And I do want to see this continue to go down. I personally think that this recent S&P bounce back is a bit pragmatic and silly. I do think it should continue to go down. I think the market overall is just still overvalued. Obviously things were starting to look cheap here, but I would like to see them start to look a bit more cheap, if you know what I mean. So do Apple look to be undervalued currently? Well, no, definitely not. On a bullish intrinsic value here, we can see this stock is set at $201, with the current price being set at $193. You could argue that looks undervalued, but of course that is the bullish metric. When you add a margin of safety of 25% to this, it gives you an acceptable buy price of 151, suggesting this stock does not look undervalued. And if we go on the bearish side here, we have an intrinsic value set at 117 and an acceptable buy price of 88. If we go in between the two of these, we have an intrinsic value set at 159, pushing 160, and an acceptable buy price of around 120. So with the current stock being priced in at 193, we can say the stock does not look undervalued at all. It actually looks really quite overvalued, with that keeping in mind the growth rate of 11.97 for the next year and the current earnings per share. And actually the AAA bond yield right now is much higher than 4.8, which would just push this stock further down if I did actually put that in properly. And Peter Lynch's valuation only suggests this is just going to be worse, as it gives a result of 0.41, suggesting this stock looks massively overvalued. And on a free cash flow analysis, I haven't done this yet, so bear with. Okay, I have now done this, and we can see here that we are looking to be overvalued here as well. If we scroll down to the summary here, we can see a 9-year discounted price per share is set at $216, which is obviously approximately where we are now. 3 years is only set at 72, and this year is only set at 24. Of course, that just projects the future growth, and to be fair, Apple stock, the free cash flow isn't growing as quickly as it has done in the past, because it is a well-founded business now. It's not exactly something which has got much momentum behind it, as it went public all the way back in 1977. So you wouldn't really expect to see this go up significantly year over year at this rate, even though they are actually growing relatively well. And I think they're now going to be negatively affected quite significantly by this recent tariff news, obviously because of the recent decline in Apple stock. But that's enough about my opinion. I'm putting this currently at a sell. What are the analysts putting this in at? Well, they're actually putting this at a buy, with a general consensus of 46 analysts. 21 actually put this at a strong buy, 7 at a buy, 15 at a hold, 1 at a sell, and 2 at a strong sell. Personally, I don't think this stock is intrinsically there, and I don't see enough future development to warrant this being a buy. Apple is a company in which just brings out the same thing year after year at this point. Obviously, they try and innovate with things like the Vision Pro, but people just didn't really want it. It was just a bit of a hype train, and developers quickly stopped developing for the Vision Pro, with app developers basically saying that they don't see there being a high enough of a market for them. So I really will be interested to see what happens with Apple stock. Again, they just bring the same thing out over and over and over again, so I really do struggle to see how people are actually putting this in at a buy, especially when now they're going to have massive issues with manufacturing capabilities, especially with China. You can't, I mean, that is unsustainable. A tariff of over 100% is ridiculous. So that's just my opinion, but the analysts are actually putting this in at a buy. Let me know if you agree or disagree in the comments. With that being said, I'm going to end this video here, as I do now have to drive quite a long way. So I hope you have enjoyed this video. If you have found it useful, please do leave a like, subscribe, and I'll see you for the next video.